and look at dollar CAD. Basically, do we buy it or do we sell it? Ahead in about 4 hours time from now, we've got the FOMC statements and the Fed statements, the rate release, and who knows what will happen there. But let's just go to the charts and do the technicals, and we'll basically break down two options. This isn't me telling you to buy, this isn't me telling you to sell, this is purely breaking down the chart and giving you an idea of how you could potentially be selling or potentially be buying. It would depend only on your strategy and your rules for entering, exiting, and how you see it. But yeah, just to give you a helping hand of what I'm looking at anyway. So daily chart is quite simple. Right, so I'm just going to change it to the pointer, 2 seconds. Let me get the pointer there. So yeah, put the horizontal line of resistance on the daily chart. Top of the wick, came down just shy of that there, and then we worked our way back up, paused right at it, had a bearish candle close there with a shadow above and another one, and then we moved back down, and then we attempted to come up sort of 60-80% of the way up, and then came back down and making a final push, or made a final push up for a third proper attempt at that horizontal level of resistance. So 1, 2, 3, 4 rejections of that level. So instantly we could be saying, all right, no, I'm only looking for shorts here to basically travel back down to basically travel back down from anywhere from here down to here is what you're going to be looking at, if that's what you think may happen. 3 bearish closed candles. Right, let's go down to the 4 hour. Here we are on the 4 hour chart. Okay, so all I'm going to do is show you what I'm seeing. Obviously, we're going to keep the blue line, that's for the daily resistance level. Now I'm going to pop another one on there. Oops. Now, if you're wondering why I'm not going to get it, basically, if you're wondering why I didn't take the tops of those, you can take the tops of those if you like. You can also drop it down so that you catch the top of this candle's wick, as so, like I did before, or you can drop it on the closes so you get all of them. It's up to you. It's a zone, isn't it? As we know, as we go through in the other videos, as it's a zone, it's not an exact price, an exact line. So we can leave it there. It really doesn't matter. Maybe I should change the color of this. I'll change that to green. So we've got the blue one at the daily resistance, and we've got the green one. Now all I'm looking at here, so the price came up and we dropped back down, we moved off again, put in a small little retracement there, and then we pushed up, and we're sat sideways, aren't we? Sat sideways there. Now what did we do? Well, let's just have a look at when we've made a move up and we move straight back down. Where do we test? This level here was held nicely, mini double bottom on a lower time frame. That potentially could have been nice for a long entry there. And we moved up and came down. Simple structure. So let's look at this as if we wanted to be bearish. Our bias was that the market's had enough, it's tired, it's going to move down. Again, we've got no idea if it's going to. And so what we'd be looking at is for price to continue up here. For whatever reason you got short, you would be getting anywhere from here to here, because if it broke above this level, you wouldn't want to be selling it really. Let's say, for example, you had a reason to get in somewhere here. So you sold it to go down. You've got your stop up here. Now you'd be looking, I would be looking for the market to retrace. First thing I'd be looking at is here, because this is the next support structure level that price held out last time. What else would I be doing? I'd be taking a Fibonacci level. I'd be taking the Fibonacci level from the swing low to the swing high, and I get a 50% retracement right on that level. And the next level I'd be looking at is the 786 level, because of this structure that was held here. So let me take out the 61 and that one there. Right, so quite clear to see, quite easy to see. Right, so quite easy to see that the first target for me, if we were to break out of this consolidation area, would be the 50% retracement level. Why? Because it lines up with structure. The second level I'd be looking at is the 786 fib retracement. Why? Because it lines up with structure. This piece there, 1, retracement, close above, pull back down, held there, 78.6 fib level, confluence. So that's what I'd be looking at to go short if I was going short. However, I just have to add in there is no reason for me to get short. You could either get short here, or you could actually wait for a break. You could wait for price to come down, actually break out of this level, and you could sort of, if you're a breakout trader, that would be where you'd be getting in. But you know, I would also, if it was me, I'd be looking at my targets here and here. So I would rather look for a reason to get short here than waiting for the breakout. But that's not what I'm doing. So we're just going through the scenarios here, just basic technical analysis of why we're getting confluence with the Fibonacci tools and structure. We're basically just building a case. So it's just the learning process. I'm only doing this to show you how and why you would enter a short position, building the case, building a scoring system. Do I need to take all of this off? Probably not. Oh well, I'll take it off anyway. Right, so we're back to the start. This is the daily resistance. Right, now let's say that we feel that we want to go long and the market's going to continue. Why would we think that when all of the resistance we've seen before? Various reasons on the higher time frame. Let's just say that you think that the market's coming up for a third attempt and is going to try and push its way through there. So we're down on the 4-hour chart, 240-minute. Basically looking at the same thing again. We moved up, we came down. I'm going to take that move up here, small retracement, and a move up again. I'll add these in anyway. Structure, move back down. Right. Simple structure analysis, but this time we're looking to go long. Okay. So now what I could be thinking, let me just move that there, is we pushed up. I'm just going to drop these back down as well. I'm going to drop those out of the way. First things first, quite simple for me. We broke and we closed above this level. Quite easy. I'm going to get the crosshair now so it's a little bit easier. This level, we broke and closed above here. Oof, broke and closed above. Instantly came back down to test it once. We moved up, tested it twice. So we've tested that level. I'm just going to change the color of this to, let me do the area to be dark red. And better change that as well. I'll probably edit this bit out. Sienna, oh lovely. Once, twice, 3 times, and now we came down for a 4th today there on the 4-hour. So simple trend continuation trade for me. We moved up, we closed above, tested once, twice, 3rd time, 4th time, pin bar. I could be getting long here. Okay, so I'm long there. My stops obviously are going to be below here somewhere. Basically anywhere, excuse me, I'll do that so it's a little bit clearer. My stop will be anywhere under this level here, anywhere between there, because this is the swing low point. Ideal point would be here, but it's a little bit too much risk, so I'd be more aggressive placing it somewhere around here. Most likely be under the even handle number of 130, 100. So if it would be 130.95. Targets, simple Fibonacci extension. Let's see what that gives us. So let's do it from this is basically the main leg I'd be looking at for my Fibonacci tool. This is just a small blip there. So I'd be looking at my main swing level from swing low to swing high. I know already that I'm looking for my 127 and my 1618 Fibonacci extension level, so I'm just going to drop those on there. I'm going to scrunch up the chart a little bit and drop that down. I haven't even looked to the left yet. I'm just going to drop on the horizontal lines on those levels. Let's make them red so that we know what we're looking for, or fuchsia. Fuchsia. Right, let's see what that gives us. Have we got any structure back there whatsoever? In fact, what I'm going to do, I'm going to bump up to the daily chart for this. Let's go here. Have we got any reason to think that this might be a decent level? Well, the 127, not a bad area to look at. Tested once, twice, so a third time, just sat just under there, and then a bit of consolidation around that area as well. So between these two levels of the 127 and the 1618 Fibonacci extension level, we've had basically support and resistance within basically at that level. The 127 is looking stronger. I mean, you can see that tested. We haven't had a strong test on the 1618 there, so I know straight away that that's what I'll be targeting. Also, what I can do is drop in from the biggest move on the daily chart, swing low to swing high. Can we get any confluence there? Let's have a look. Yeah, again, it's a zone, so we've got confluence there. 50 in the 1618. The 127 is close to the 138.2 Fibonacci retracement level on the daily, so that's set at 13100-ish, 131.09, 133.09, excuse me. So what I will do, I'm going to draw a little box level there between the Fibonacci level and the 127 structure level. Do it a bit bigger so I can clear. I'm going to drop down to the 240 again, and now I know that I've got my target areas somewhere in here. Now I'm not just going to put a hard target there. I'm just going to wait for a slowdown, wait for price action, see what happens up in that area, if it was to break out and go that way. Again, this is just for educational purposes. It's only to sort of show you what I'm looking at as far as technical analysis goes. Pretty simple, just combining a few different indicators along with structure and price action in particular areas where they're confluent, and yeah, keeping it simple basically. Doesn't need to be difficult. Just a little note that look at that rejection off the EMA there. That's the extra confluence. But yeah, let's have a look at that. Let's see what happens with FOMC. Let's see which direction it does go. Let's see which case that we built was strongest today or in this point in time. So alright guys, hope that helped. Like I say, it's nothing for you to place an entry or a trade entry on. You go do your own analysis. You can absolutely use the tools in the way that I've taught, but you will be using your own rules and your own strategy plan to enter or exit the market. Alright, thanks a lot. See you on the next video guys. Take care. Bye bye.